This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus has exported a record amount of refined products, blunting the impact of the group's crude output curbs, as members including Saudi Arabia seek to boost their revenues and market share, according to industry data and analysts. Supply targets agreed by the OPEC Plus focus on unrefined crude production. This means individual members can increase exports of fuel products, if they have enough refinery capacity, without violating pledges to the group.
Global oil supply could exceed demand by around 600,000 barrels per day this year, the International Energy Agency said on Thursday, due to growth led by the United States and weaker than expected global demand. The outlook of ample supplies despite U.S. sanctions on major exporters Russia and Iran highlights the challenge for OPEC Plus in balancing the market. The United States is currently producing at record highs and is forecast to be the largest source of supply growth in 2025, the IEA, which advises industrialized countries, said in a monthly report.
Moving on to the top news in the energy sector.
The Trump administration announced a wave of regulatory rollbacks on Wednesday, including a repeal of Biden-era emissions limits on power plants and automobiles, as well as reduced protections for waterways. The announcements from Trump's Environmental Protection Agency align with the president's vows to slash regulations to boost industries from coal to manufacturing and ramp up oil and minerals production. But they are also destined to weaken bedrock environmental rules imposed by past presidencies to protect air and water quality and fight climate change. Today is the most consequential day of deregulation in American history, EPA Administrator Lee Zeldin said in a video message posted on X.
Qatar is set to supply Syria with gas via Jordan to improve the nation's meager electricity supply and boost Syria's new rulers, according to 3 people familiar with the matter, in a move that a U.S. official said had Washington's approval. It would be the most significant tangible support for the new administration in Damascus by Qatar, one of the region's sternest opponents of the now-deposed Bashar al-Assad and strongest backers of the rebels-turned-rulers who replaced him. A U.S. official said the gas deal had a nod of approval from President Donald Trump's administration without saying how this was communicated. Next, we have the top news in metal markets. Copper prices retreated from 5-month highs on Thursday as worries about global growth dulled the impact of U.S. tariffs inflating metals prices, while tin prices spiked after a mine in Congo closed. 3-month copper on the London Metal Exchange, LME, was up 0.1% to $9,778 a metric ton by 14:30 GMT, pairing gains after hitting the highest since October 11 at $9,811. U.S. COMEX copper futures rose 0.5% to $4.87 a lb. Traders have been bidding up metals prices impacted by U.S. President Donald Trump's campaign to slap tariffs on foreign imports in an effort to boost U.S. industry. LME copper has gained 11% so far in 2025.
Gold prices rose more than 1% to an all-time high on Thursday as elevated tariff uncertainty and bets on monetary policy easing by the Federal Reserve kept bullion's appeal strong. Spot gold was up 1.3% to $2,969.53 an ounce, as of 10:51 Eastern Time, 14:51 GMT. U.S. gold futures climbed 1.2% to $2,982.50. Gold is in a secular bull market. We forecast prices to trade between $3,000 to $3,200 this year, said Alex Ebkarian, Chief Operating Officer at Allegiance Gold.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures settled higher on Thursday, underpinned by lower production levels, although persisting concerns over demand from key importing countries capped gains. The benchmark palm oil contract for May delivery on the Bursa Malaysia Derivatives Exchange gained 52 ringgit, or 1.16%, to 4,533 ringgit, $1,022.10, a metric ton at the close. The contract had fallen 2.98% in the last 3 sessions. The palm oil market appears to be quite resilient despite the sell-off due to global market uncertainty over tariffs, as production has not picked up even in March, while demand still remains a concern, said Paramalingam Subramaniam, director at Selangor-based brokerage Pelinding Bestari.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.